Hello everybody, hope that you are very well and welcome to this evening's Contenders live stream, not plural, where we are going to be going over, starting with ZRX chart of the week, moving on to, well actually I want to go over ZRX chart of the week and I want to go over last week's one, WRX, sorry they're so similar, I kept getting them confused, WRX and ZRX, but I'm going to want to go over last week's because it played out really nice indeed. I'd just like to spend a few minutes going over it. And then I want to move on to the main show, the footprint charts. Okay, so footprint charts, what exactly footprint charts are, how they're useful, why they're useful, and then how we can use them. Especially useful when we're breaking out of a range, or obviously swing failure patterning a range. So like how we use this, or how I particularly use it when I'm looking for swing failure patterns or expecting a swing failure, or I'm not going to expect a swing failure pattern. So basically that's what I'm covering today, then how we use this on breakouts, how we can use it for looking at support resistances. And then I want to I'll end with looking at Bitcoin, I suppose. Hope that everybody is okay here. Let me just see all the comments. Hello. Yeah, unfortunately I cannot play music with on YouTube because I'll just get banned, so it's not good. Cool, all sound is okay. No me complico como te explico que a mí me gusta pasarla rico, eso amarillo. Sí, me encanta esta canción. But let's go into the live stream tonight. This is obviously Bitcoin. I'll cover Bitcoin at the end. I want to start here with that range, by the way, is just being perfect. I want to start here with ZRX. So ZRX chart of the week. Let's go into this. I guess start with the disclaimer if you just want to pause and read through this as always. Okay, let's begin. So ZRX, what are we looking at here? Or I was looking at basically this forward to drop down into a confluence region that I really believe that we have here. Okay, so just first off, ZRX absolutely loves the CC. So many times you see bounces off the .66. I think when I originally done my live stream on this, I had like a lot of examples from ZRX, and it just continues to just be an absolute dream to trade off of. ZRX definitely one of the top altcoins for this, without a doubt. I'm looking at this with the confluence of the 1-to-1 coming into this confluence sort of congestion zone that we had here. So I've got confluences here on the 1-to-1 extension, but I do not have bids preset. Okay, so I do not have bids waiting here. What I want to see is, I'll come over to the chart. Okay, so what I want to see is something along this lines. Okay, I want to see basically price drop down. Okay, maybe do something like this, drop down into the level. Okay, so when I have the alert go off that we've dropped down into this level, then I'll obviously come across to the chart and look for an entry, whether that entry is given back on a rise and then the next retrace. I'll look to obviously long here with stops below the lows, depending on how this comes down, because it's a little bit of a harder trade, so it's a lot harder than like last week's WRX, where I was waiting for this to also drop into a level. The reason this is harder because of the fact it went up so quickly, didn't really build up so much support. So if you just look at this on the daily, obviously it went literally crazy, done 140% in just a few days. So when it does go up so quick, it does not build the same layers of support for the way back down. So yeah, it kind of makes it a lot harder to not necessarily harder, but you just want to be more cautious while entering the trade. So I'm not going to have any bids preset here. I don't think that we're going to go straight back down, if I'm honest. I think that this one will do something more like this, bounce, and then whether that bounce then gets follow through or whether that just does lower high and then down. I am expecting this to put a bounce in here. Obviously, this is not by any stretch of imagination like my perfect Elliott wave count in here, but we obviously had some form of 1, okay, 2, and then whether this was like a 1, 2, 3, 4, and then some sort of third coming in here, and whether what I was going off originally was to get this 1-to-1 extension, as you can see here, was this first section, and then we were coming up in the in the midst of this when you look at the print screen that I done, we had put in an impulse. And then I was taking this extension from the first bit of consolidation region that we had here. So this was what it originally looked like when I took this 1-to-1 extension, by the way. You can see now it's a little bit, it looks a little bit outdated sort of thing. But nevertheless, that's what I was going for. From the high to the low to what I was envisioning, this to be our area of consolidation before another impulse. And then you could look at this simply, okay, so some form of simple impulse consolidation coming back down for the impulse into this region, giving you a 1-to-1 before looking for a bounce up to around here sort of thing before make a decision. Does it then do this, or well, nevertheless, that's what I'm looking for. Obviously, yeah, the trade off this went really, really well indeed. I will run you over it. I've already done a few videos on this, but I'll run you over it really, really quickly. Obviously, we had the impulse, okay, from last week. Actually, I can't remember whether last week what this setup was like. This broke out really heavily on the 8th. Last week's was the 6th. Okay, so this would have been just before, okay, last week's. Okay, so obviously, yeah, this is what happened. We didn't hit. Yes, I remember this now. I think I remember covering this last week, where we were pretty sure it was WRX anyway. And it wasn't. It was WRX I done last week. I'm getting really confused what I done last week. I can't remember when I done this one, but I remember talking about this one in a live stream. Maybe it was 3 weeks ago. I can't remember. But basically, we were obviously waiting for the harmonics to play out. Really, really nice Gartley that we had, on our minds. In the end, it never hit the Gartley. Okay, so it never hit the Gartley. But then, like what I was saying is, if you're waiting for a setup, okay, so if you're waiting for, obviously I was waiting originally for this, run of the lows. But when that never happens, you have to react to the chart. So you can view a chart in one of two ways. If you get a big rise before you're in on the trade, you can think to yourself, oh my god, I missed the trade, I'm so annoyed, and just get really frustrated about missing the trade. Or you can jump in, do some technical analysis, work out where the next retracement is going to be, and like jump in there. Okay, so just because you miss an impulse doesn't mean it's game over. You buy the retrace and look for another impulse, sort of thing. And as you all know, that this was one that I done. Oh yeah, it was a live stream during the day where I literally gave you this perfect triangle of that A B C D E, because what we had was impulse, okay, flat with our ABC. And then we had another impulse, and then I was looking at this as the A, B, C, D, E triangle, which we got really perfectly, break, back test. And then obviously we moved up for that, 50% rise. And from that 50% rise, okay, what we done, we took the Fibonacci from where the impulse of this next leg started. So obviously, start of the impulse to where that next impulse ended. So, thinking of it like impulse, correction, impulse, correction, impulse. Okay, so then what did we have here? Really simply, this was already a 50% gain, traded really, really, really amazing. And then we obviously come back down, okay, and then there was an original fib pull from here to here where you had this going to the 618 to the 618, and then where the impulse started to where it ended. Okay, if I just line that up really exact so you can see how, trying to click here, you can just see how perfect this was. Come down to the 6.6 there. And then where it topped out in the end originally, which was around the negative 0.236 Fibonacci, then that was another increase in price by 43%, and this is literally within a few days. So you saw that 50% rise, okay, to the 6.6, and then followed by, let's be honest, I didn't sell the top again, but nevertheless, I still made another 35% on it. So it was absolutely crazy, okay, absolutely crazy. And that was all originally traded from the lows. So yeah, I just want to really highlight that just if you miss the original origin of an impulse, doesn't mean it's too late, because obviously, as you all know from when I done the live stream on this one, I rebought back in here. So originally this was my first entry on it after seeing that original impulse, got in off of the what I was looking at was a flat. Okay, then I got it back in as well when we done the ABCDE triangle. Then again off to CC. So yeah, that's just absolutely insane. Okay, so yeah, absolutely have loved ZRX, and that's what I'm waiting for next. Okay, whether it comes down a little bit lower, I will play this a little bit more slightly cautious just in case we do come down lower. But yeah, this is the next region of interest for me, so I'm not going to buy it where it is now. Again, at the very least, I'd want to see these lows taken, so at least this low. But yeah, preferably, I'd like to see it come down to the 1-to-1 or into this consolidation area before I get interested in again. That's what I'm doing anyway. So there you go. So yeah, that's ZRX. Yeah, that is the ZRX setup, and that's kind of what I'm waiting for. So yeah. Holding fire on that one at the moment. And then I wanted to go over quickly WRX. Okay, so WRX this must have been last week's. I'm getting really confused of when I done each of the live streams, but yeah, this was obviously the one that I had. Yeah, this was last week, I'm pretty sure. Was WRX, where I was saying about waiting for the liquidity. Obviously what this happened was it had a really big pump. Okay, so that really big move to the upside. Okay, you were looking at like 100% increase in price. Then you obviously got that nearly 50% retracement off of that. Okay, so 100%, from the lows. This was even bigger, sort of a massive 295% increase in price. Okay, so massive pump. Okay, from that original pump, you had your first correction here, where you had your move down and then you moved sideways for a little bit here before getting another move to the upside here. Okay, which was another big increase in price. But nevertheless, from the original pump from the original high of the first pump, which gave you nearly a 300% rise, this was the first low made, which gave a nearly 50% decrease in price. Okay, so after that first low made, again, I did not have bids waiting here, by the way, so I didn't have bids preset. But again, this one was super easy trade. What happened? It came down to the level that I was waiting for. Literally, like, this is unedited. Like, this is literally the same levels that I had last week. Come down into the entry there. Okay, so obviously I had my alerts going off here, but I did not buy straight away because it was a little bit too risky for me anyway. So what I saw was it got an increase in price, and then that for me was fine, because then it had actually changed the market structure. It had got only by a wick, but nevertheless it got back above that high. So for me, like, the risk is really defined. I know what I'm trading. I know where I'm wrong. I'm happy to place a trade on it, essentially. So I'm going to try and calm it down because my throat is, I can already feel it. You have to just remember that with no risk, there is no reward. So if I'm too scared to put on a trade, I can never make money. Okay, so some people will see this opportunity. I laid this plan out to everybody, but there will be 50% of the people that didn't take it through just the fear of it might go down lower. But then you have to just always say to yourself, with no risk, there's no reward. And it's not just about randomly entering trades. You do have the good probabilities. You have just taken that major low. Okay, so that, well, I can't zoom out far enough, but we had just taken that major low. There was a really big liquidity run. Okay, then we had an increase in price, which took out some highs, which changed some structure, and we were coming back down to a value area. Okay, so we're talking about a really small risk. Okay, on small risk with a well-defined setup that we were pre-prepared for. So it's not like we're just seeing this and we're just thinking, what we're doing here, let's just buy 618. We had been waiting for this one for a good length of time. So it was a very pre-planned, know what you're doing sort of setup anyway. And then obviously from there, we had this really lovely increase in price. And as you all know, the take profit one was the weekly. Okay, so from entry to take profit one, 11%. You cannot complain about 11%. That's a crazy good game. Okay, so obviously that hit my take profit one. I have then moved my stop loss anyway up to break even, so there's no way I can lose any money on this trade. So basically it looks like this for me now. So the stop is, well, break even, and I've hit my take profit one. The next level that I want to look for, okay, is the monthly. Okay, and then if we can do something like this monthly and back test the weekly, then I will take a compound. I'll compound that trade back up because I'll hit 2 take profits. So I'll look to compound it if I get given that chance, and then ultimately try and trade it up to the weekly. Do we get up there? I'm not sure at the moment, if I'm honest, but nevertheless, I would expect something like this. Okay, before looking to get back up. Again, there's no real resistance between these two levels. So if we can get this monthly reclaimed, and it's probably going to look something like this. Something like this before we make our way there. It's not going to be just plain and simple, I wouldn't have thought. But nevertheless, that's kind of the setup. I'm happy with how this is going. This is obviously a 4-hour chart. We do have a higher, looking for this higher low to move on again, obviously. So if we do this now and we just head down, well, I'll have locked in 10% off the take profit one, and I'll get stopped on the rest of the position, break even. So I'm fairly, don't really, I'd like it to go up, but at the end of the day, if it doesn't go up from here, then it's not the end of the world. So that's I wanted to give an update on this one because I was really happy with how this setup played out. It was brilliant. So that was WRX from last week, how we could recognize these signs coming together, why it's really important to remain patient. Okay, so it's really ultra important to remain patient. And then when you have a setup in mind, take the setup. Okay, one thing I would always like to, a question that I do get asked a lot is, do I trade altcoins when Bitcoin's volatile? Okay, and this is just something I just thought of off the top of my head because it is a question I get asked. And my answer is generally this, that if I feel Bitcoin is in an ultra pivotal moment, I will not trade altcoins like. Or if Bitcoin's really volatile, I just won't trade altcoins, because personally I make more money trading Bitcoin because I assign more money to Bitcoin, you know. So whereas on like a, let's say a 10% move on an altcoin, to make the same amount of money, I'm looking to trade like 1% on Bitcoin, because obviously I'm placing more. I don't know why, but I just place more capital in Bitcoin. So for when Bitcoin's volatile, I don't really pay too much attention to altcoins, because I don't know, I just don't need to, I suppose. So that's one of the reasons I just prefer to trade Bitcoin when it's volatile. Secondly, when Bitcoin is volatile, altcoins generally fall in price anyway, and I don't really short altcoins. So in that regards, I just kind of leave them to trade Bitcoin, I suppose. But I always do say this is a saying that I will always say, and that is, when an altcoin does have a really good setup, do not be afraid to take that setup just because of Bitcoin. Because at the end of the day, when an altcoin has a setup, you need to take the setup irrelevant of what Bitcoin could or could not be doing. Because you might have a gorgeous sort of setup that's given to you, and you might think in your head, I'm not going to take this because Bitcoin might move today. Okay, Bitcoin might break resistance today. Bitcoin might break down today, so I'm not going to take this altcoin. And then Bitcoin ends up going sideways for the day, and your altcoin's just done a 10% rise, and then you're obviously going to kick yourself. So what I generally do, if there is a really nice setup that I'm waiting for, and I think it's a really nice setup, I will just take the altcoin setup. Okay, it doesn't require too much management. The majority of my altcoin trades are swing trades, so I'm not really managing them so much. If Bitcoin is really sideways, then I will do days of just altcoin day trading, and there are days where I will just trade altcoins, sort of thing, and that when there's special conditions. But nevertheless, altcoins, that's my view on altcoins, and that was just, I just thought of that because I do get asked that question quite a lot, of like my position or opinion on altcoins. And another question that I suppose I get asked quite a lot is, do I trade? I'm not going to go off topic actually anymore. So yeah, that's basically my opinion on alts, and why I will take them when there's a setup there. So yeah, just to end then with those, then that was my ZRX one that I'm looking for next. Again, not financial advice on this, educational reasons only. But yeah, that's what I'm waiting for on on WRX next, and obviously ZRX, WRX. I'm gonna give up trying to name them because I'm getting so confused. But yeah, that's what I was looking for, and yeah. This is obviously what it was looking like this morning, where I was debating, will I get this entry, will it retrace? I'm not sure, but I'm not going to jump into it again where it is at the moment. I'll either wait for a retrace or have to buy in higher to trade it, sort of thing. I'm not really that bothered. And this was how WRX was looking this morning. Cool, so there you go, that's the chart of the week's done, and now I will move over to the footprint charts. Excuse me. So footprint charts. So there is it's quite a big jump, I suppose, for many traders going into footprint charts. They are obviously a lot different than standard candlestick charts, and when you see a majority of charts, like 90% of chart shed are always generally going to be these Japanese candlesticks, just your standard Japanese candlesticks are what the majority of people trade. And what I want to give you tonight is somewhat of an introduction and how I like to use the footprint charts. Okay, so what you have to acknowledge is that footprint charts have a lot of depth. Okay, so it's very hard to there's just so much to go over with them. So basically, what is a footprint chart? Okay, for the people that do not know this, and for many this is going to be quite foreign to them, in terms of they are a lot different than your standard charts that you're used to. So it's obviously really exciting because they are a lot better. Well, I can't say better, I suppose. They're just a lot different, and you get different information from them. But it should like open up your eyes to a whole new world that's awaiting you, sort of thing, in terms of trading. So yeah, being a footprint chart is essentially being able to look inside of a candle. Okay, this is obviously extremely invaluable to be able to see the amount of transaction it actually transacted at each price. Okay, so there's a lot of information that you can get from footprint charts, and today I'm going to be focusing on specifically the volume that you can see within inside them. Okay, so obviously this is your standard candlestick where you have the OHCL, your open, high, low, and the close of a candle. Okay, so this is your standard candlestick. Okay, so imagine this candlestick. Well, actually, before I say that, and then this, just by the way, in case you get confused, this is what a footprint chart looks like. So this is what your candlestick is. This is what your footprint chart is, as we'll get to in a second. So, so yeah, basically, so what is a footprint chart? Essentially, you can see inside of this candle. You basically get that candlestick. Okay, so we're taking this candlestick here, let's say. And what does this look like to you? You might say that this looks like a bullish hammer candle with a long lower wick and closing near the high of the candle. Many people would look at this very simply and say, oh, there's a really bullish candlestick. I'm going to buy, sort of thing. I don't know. Like, people are going to be thinking that, especially people that just trade off of candlestick patterns. They might look at this and think, I'm going to buy this. But what do we know as having an advantage of being able to understand and read footprint charts? What we can say is that essentially this. Imagine this candle. Okay, so this candlestick pattern, we have had just a long lower wick, which you may think is bullish, but by being able to see exactly where the majority of the volume is within this candle is much more helpful. For example, if all the volume is at the high of the candle and you are actually closing below the high, then it's not bullish. So what you do not see on this, so this is a made example. Let's say, for example, we were going sideways on Bitcoin near the bottom of the range, okay? And then we move, okay, we open here and then we get a high. And then just at that high, you get 100 million contracts sold. Okay, let's say 100 million contracts sold, and that flushes the market down really, really, really quickly. Okay, we get a big move to the downside where we had 100 million contracts sold up here, and let's say there was also we saw that there was a limit order waiting of 200 million. So there was a 200 million limit order getting filled, and then somebody was thought to themselves, okay, there's 200 million sell wall here, I'm going to market sell 100 million, and you get the quick move down. So all the volume is near the high of the candle here, and then you get the quick move to the downside, and then it's bought up, let's say, on 1 million market buys because the order book had been wiped. Okay, so the order book had been really quick cascade, so it was a very thin order book for the price to end back up here, let's say. So then we had 200 million waiting to sell. You had 100 million market order that brought you down, and you're bought back up to the same price on 100 million because of a thin book. And then what, to a standard person that doesn't know to understand a footprint chart, they're going to see that candle and they're going to be like, oh, this is really, really bullish. We've just had a hammer candle. We're going through a support, and look how bullish this is. But what you would be able to actually see when you can read a footprint, you'd know exactly what's actually going on inside this. That you'd been able to, dissect exactly why we had the move down, why we had the move back up. Okay, and obviously that is extremely invaluable to know that information. Whereas someone just looking at this, and obviously the majority of people would believe that maybe the highest volume is in here, but that is obviously not the case. Sometimes the wick will contain the highest amount of volume. It's not. Just because where you close doesn't mean where the high volume is. So to know where all the volume occurred within a candle is extremely invaluable. Okay, so being able to see where we have had a lot of buyers and sellers also horizontally can also assist us in a far superior fashion to interpret support and resistances. Okay, and I think I've highlighted this in the last few live streams, obviously looking at pointer controls, etc. Off of like our fixed ranges that we've been using, but today I'm going to introduce volume clusters, which is another type of footprint charts that we can get. So I'll introduce that a little bit later. But importantly as well, being able to see acceptance below or above a key level is only possible using a footprint chart. A candlestick cannot show you this, period. Okay, so when we talk about acceptance, and as I've like hinted on recently, like, for me, acceptance above a level or acceptance below a level is dependent on volume transacted. Because what we can say is, if you have a level and you trade let's say you're trading in a range. Okay, we're trading in a range and the average rotations high to low, within our range, let's say our average candlesticks are all occurring on 10 million volume. Okay, let's just say. So you're seeing 10 million volume on every rotation, and then we break out above the range, and above the range you're trading with 5 million volume. So this would say to yourself, this is what I would, how I would interpret this, is that if we had moved above the range on very low volume, that this move up is then generally not accepted. Okay, so when you move above to a new range, as I've covered in a previous live stream, when you move on to that new range, or when you break out of the range, you do want to see that accompanied with increases in volume. Okay, because then that's showing acceptance. People are actually willing to transact at this level. Whereas if you break up on low volume, you could say that there has been no acceptance because people are not actually willing to trade highly at these higher levels. So it's more likely to come back down to a fair value. So where the footprint chart comes into this, well, this is what I'm going to be going over now. So this is obviously, I'm just going to take another drink really quick. Okay. So this is obviously our stand, and this was our lovely range that we have going on Bitcoin, which had just been perfect. So obviously this was the range that we had been trading over the last few days, and obviously from this range, what we can see is, well, all we can see really is, okay, we've gone down to the lows, we've come up to the midpoint, we can see rejections at the midpoint, come back down to the low with a quick move, come back up to the midpoint, got a bit of rejections, to the low, to the high, from that high come down to the midpoint temporarily before coming down to the lows. From the lows we can see a lot of long lower wicks onto the low before we come back up to the midpoint here, before we come back down to the low, before we come back up to the midpoint, before we break the midpoint and we retest the midpoint. Obviously we would expect the push up to the top of the channel. That's exactly what happened. But yeah, when we compare this standard chart here, you cannot really say, so the advantage of the footprint is when we come up to this high, we want to be able to know, are we breaking, obviously in the real time, are we breaking up here? Is this getting acceptance above the range, or are we actually more likely to come up here, swing failure as it done, and come back down? When we come down to the lows, are we, once we've taken the liquidity of this low, are we expecting, or let's just say while you're at the bottom, are you expecting this to continue down, or are you expecting this to get bought back up and continue range bound? These are things that you can only see from a footprint chart. So it's extremely useful. Okay, so this is a higher zoomed out view of a footprint chart, okay, because obviously the more we zoom in is when we actually see the numbers, but this is essentially our bid ask profile. Again, you can get this across lots of different software, but I'm just going to explain it tonight on XOcharts. You don't have to use XOcharts though, but yeah, basically this is our bid ask profile. Bid ask profiles are very useful when you, especially for scalp traders. Okay, so if I'm totally honest, I wouldn't, although it's helpful on higher term timeframes, don't get me wrong, I primarily use all of this when I'm day trading, if I'm totally honest with you. But yeah, the theory obviously applies to all timeframes, but I personally use this primarily on lower term timeframes, but then obviously I primarily only trade lower term timeframes. But so yeah, and obviously when you compare this is the exact same view. Okay, so the exact same view. This is on candlestick charts. This is our footprint charts. What is the difference here? What can you see the difference is here? Okay, so what sticks out to me? Okay, I'm going to go load up XOcharts in a minute, but what sticks out to me is that when we come down to the lows, okay, so you see when it's like you have thickness, and then obviously you have really thin, okay, really like thin profiles. So what you generally want to see is that when you are breaking down below a range, you don't want to just see it go really thin. Okay, you actually want to see the volume continue to build up as you are, if you're a bear anyway, you'd want to see this volume continue to pick up as you're going down. And if you're a bull sort of thing, you'd want to see this, break up with, an increase in volume to the buy side here. You'd want to see the breakdown with an increase in sell volume. But as you can see here, obviously in retrospect, this would have obviously, this is what you would have, seen in the time as well, I suppose. But, as you're breaking down each time, the breakdown is on very low, you can see this, the original, breakdown had no sell volume and it was then bought back up. We try and break down again. There's no real volume. You come back up. Okay, you break down again, no real volume, you come back up. Break down again, no real volume, you come back up. So there's not many interested in selling these lows, are there? That's the first thing I would say. When we're coming down to this 8,000 region, there is very little selling interest. People are not interested in selling at this price. So does that mean, what can you take from that? If people, as price come, we've seen it come down 1, 2, 3, 4, 5 times price tried to come down below these lows, and each time it's come down there's been hardly anybody wanting to sell, and there's been more buying interest than selling interest. Obviously that leans you to a bullish perspective. And then so this is the zoomed out view. This is actually the zoomed in view. Okay, so this is taken from the first drop down. So this is this candle zoomed in, by the way. As you can see, the first drop down that you had to 8,100. What do you see here? Okay, so you might not, I need to explain, I guess, what exactly we're looking at. But what this is on the left is sell volume. Okay, so really simply sell volume at market. Okay, so this is 58,000 contracts sold at market. Okay, this would be 3.2 million contracts sold at market. This is 819,000 contracts sold at market. Okay, it's not one person, it's just a collective at this price. That's how much was sold. And on the right, we see contracts bought at market. Okay, so this would be 968,000 contracts bought at market. This would be 6.4 million contracts bought at market. Okay, 3.5 million contracts bought at market price. Okay, so how is this then helpful to us? What we can see is that as price came down to the lows of 8,100, you can see that the selling interest is it's obviously there to a certain extent. But what do you see? Who seems more interested at these levels? Sellers or buyers as you come down to the low of the wick? Well, it's really clear here, isn't it, that there's a lot more buyers. 6.4 million, 3.5 million, 3.4 million, 2.1 million, 1.1 million. Okay, so when you first came down to these lows, obviously again this was a quick wick, so you'd have to have been very much at your computer sort of thing. But you can see, and obviously it builds up, that this is clearly showing you that it's unlikely that this is going to get follow through, really simply going from the fact that when we reach this level, there's more buying interest than there's selling interest. So really simply, supply versus demand. There's more people that want to buy than people that want to sell. Price is going to go back up, isn't it? It's going to auction back up to a fair average price. Okay, so then this is our bid ask profile. Okay, so I'm going to load it up a second just so I can show you exactly this. 1 second. So exo charts again. You don't have to use exo charts, but this is what I'm just going to show on tonight. It's just very easy. So we can do over onto the left here. Okay, go onto a bid ask profile. Okay, on our bid ask profiles, I'm going to remove everything else so it's not confusing for us. Okay, so I don't need this at the moment, I don't need this. So really simply, this is what we have here. Okay, so you can see on the top left 2 ticks. Obviously when we're trading cryptocurrency, okay, our tick size over on BitMEX is 0.5. Okay, so like 50 cents. So when I'm looking at 2 ticks, this is obviously $1. So every tick is $1 for me when I'm looking at this. Okay, so I don't really ever use 1 tick because it's too small. I don't need to know to the 50 cent. I just like to stick on 2 ticks for generally. So then I get every $1 here. Okay, so then what do we see here? So really simply, when we're zoomed out, we can just see, again, we're on a bit of low of a time frame to see this. Just a tip that when you zoom out to higher term time frames, you are generally going to increase your tick size. Okay, so you are generally going to increase those tick sizes the more you zoom out, because you don't really need to know like a $1 level, and you want to see a bit more like levels joined together to give you a bigger support and resistance. So just for a tip, there is no like this is the best tick size to use. There isn't just like one tick size is the best. You do want to like experiment a little bit per se, but yeah, I like for day trading like down on the 2 tick setting. So yeah, what happens in here then is when we sort of when you zoom into a little bit here, you can see that on the left, like just visually looking at this, okay, so I obviously have the value area on this, so value obviously is 68% of the most value volume transacted. So if you don't have value area selected, it's just going to highlight it all. With value area selected, I'm only going to see the majority of 68% of the volume traded. it's going to hide that other 32% for me. So then what do we have in here? So what we can see really simply is sells at market on the left, buys at market on the right. What you need to do on XO is when you zoom into this, so if you want to zoom in and see the volume, you do need to click on text and click on volume. Okay, this is then just going to simply give you the volume of the total of left and right. Or if you like to see the bid ask, then this is going to give you the selling on the left and the buying on the right. Okay, so this is arguably, in my opinion, it's better than just looking at the volume, because great that I can see here that there was 800,000 contracts, but then I want to know how many was buys and how many was sells. So then I'd go onto the bid ask, and I would see, sorry, I must have read that incorrectly. There was 1.6 million contracts sold, and there was 3.1 million contracts bought. Okay, so obviously, sometimes when you come up to these levels, then if you revisit a level where there's been a lot of buying or selling on one side, then let's say if there was a lot of selling at this side, okay, and then price heads down, then great. But let's say there was a lot of buying at this side, as there was, sort of thing. And then if price heads down, then you would know exactly then how many trap traders like you have at this specific price point. And what you can also do is when you see a lot of horizontal, really big volume candles, when price is revisited to these sort of levels, there's a higher likelihood that people are going to be trying to get out break even, sort of thing. But really simply, this is our bid ask profile. This is a standard footprint chart. Okay, so this is I would say standard. So standard view, I suppose, is really volume. Okay, it's just really simply your volume, but yeah, you might as well just use bid ask because you get a little bit more data. So that's like the standard footprint charts. Okay, so you're able to zoom into the candle, okay, and then you're able to see, okay, so when we put on, for example, open, high, low and close, we can see here where how there are examples where, for example, here that this was our candlestick. Okay, so our candlestick opened here, there was a long wick to the downside, moved to the upside and then closed here, didn't it? Okay, so this is our candlestick. But then what you can see is the majority of the volume, you see how the majority of the volume is all at the low of this candlestick. Okay, a lot of the volume at the low of the candlestick. The point of control of the candlestick was also at the low. Okay, and that was obviously coming in here with the 2.2 million buy order at market. So why is this helpful to you? Well, it is helpful to you to know where the majority of that volume actually came in, to know, okay, we come down to this price, and then there was a lot of interactions at this price. There was a lot of, well, the point of control of the candlestick was obviously to the buy side as you drop down through a support level. The way that I would view this is saying, okay, we've come down through support and there was actually a lot of interested buyers. The point of control was on the buy side. It's highlighting to me that price is likely going to push up, and I didn't try and pick this candlestick just because that did happen, by the way, but that is what one would generally expect. Okay, just generally speaking, expect. Yeah, I like to look at the bid ask profile primarily when I'm day trading. It lets me see live the buying and selling interest when we approach key levels. Okay, I'm just going to take a drink. So I'm not going to be looking at this all day long. If price is just going sideways, I'm not going to be honest with you, I'm not going to be just sat here all day looking at the chart doing, like, let's say we're moving in a $10 range. I'm not going to sit there all day looking at this thinking, what way is this going to break? I'm going to be more interested in, hopefully I've already been in a position, let's say, from the channel low, and then when we reach channel high, I'm going to then look at this and get interested in working, are we going to continue the breakout upwards, or are we going to reject here? That's when I'm more interested. I'm not going to just be sat looking at nothing. So then how do you use this then? So see, this is Monday's high. Okay, so this was our Monday's high literally 2 days ago. So you see Monday's high move above the highs, okay, which was met with a very aggressive selling. So just so you're aware, by the way, Monday's high, what I'm referring to here. So Monday's high, I'm referring to this candlestick here. Okay, so this obviously action I'm referring to right here. Okay, that's what I refer to. And this is the zoomed in view of that high upper wick. Okay, so see at Monday's high was above the high, was met with very aggressive selling of the high. Okay, and the more we went upwards, the more the aggressive buying dropped and the selling increased. Okay, so what are we looking at here? I'm not saying don't look at candlesticks, okay, because obviously we're looking at that at the same point. We still need to do our technical analysis. We need to know what we're running into here. As you all know, this was the channel high, the same channel that we had been trading off of a few weeks back. So we were aware this was a resistance region. Okay, just because we hit resistance does not mean that we have to turn around. Obviously ranges break. Okay, ranges are going to have breakouts from the range. So what are some clues that we can look at to know whether a range is going to break out or whether it's going to get rejected and head back down? Obviously an extremely beneficial thing to know. So this is what we could see. Upon that high upper wick, obviously topping out at around 9,160. Look at this. Okay, so this is the buys on the left hand side. As we go up in price from this $100 increase in price, is quite a lot. The buying interest is going less. Okay, you're 6.6 million, 5.1 million, 5.1 million, 5.6, 3.7, 4.7, 4.3, and then 1 million, and then it's kind of drying up almost. Okay, so it's almost, if you want to view this a little bit more visually, it's almost going downwards, so to speak. Okay, we're getting less and less people interested in buying the higher that we get to the top of the candle, whereas the selling is got to its climax. It's almost it's increasing almost as we're heading upwards, isn't it? Okay, so you see the buying interest as we're going up is getting smaller, and the selling interest, climax or reach its peak at the high. So really simply, one would say that this is bearish because of the fact, if this was bullish, we would not want to see buying decrease as we reach the high and selling increase. We would actually want to see people willing to buy at the higher price and less people willing to sell at the higher price, for a really simplistic way of saying, okay, we're moving up in price. Price is getting acceptance. Like, what is acceptance above a level? It's when you move above the level, people are actually willing to continue to buy at this level. Whereas if you move above a level and more people are willing to sell than they were willing to buy, that's obviously, that's really simply telling you there's more people selling, there's more supply than there is demand. It's likely that we head back down. And again, this is the exact candlestick that we had up at the highs, and obviously we did head back down all the way to the lows. But all I want to stress is that context is it's massively important. You cannot just look at this with doing no other technical analysis. You will lose money. So having a the technical analysis beforehand done is extremely crucial. Okay, so you want to be looking at this when you approach, for example, the 618 Fibonacci level. You want to be looking at this when you are trying to break out of the range, when you're trying to break down below a range. Okay, so when you're approaching these really big levels is when you want to be specifically looking at this. So this is not what you would want to see on a breakout of a range, is it? Just really simply. Okay, this is how I would like to see a breakout of a range. So then this is a print screen taken of a breakout that is more bullish. Okay, so compare the two. Compare this candlestick, which was selling, okay, increasing, buying, decreasing. Obviously, if you see this, one would expect it to break back down, and then compare it to this, which is a breakout that actually or just price action that went up. Okay, really simply. So this is what you would want to see. Okay, so I would want to see a breakout of a level with volume increasing on the breakout, point of controls increasing higher as you're going up on each candle, and buy volume increasing as price increases. And what I actually wanted to stress, what I meant to write there, I think was delta, positive delta increasing as we're going up. I've got a live stream next week on delta, by the way, so delta will be done next week. But yeah, this is, again, you see the difference between the two. Okay, so you see the difference between this, which is not acceptance, and then you see the difference here where we're starting at the low and then we're building up on price, and there's a lot of people interested in buying. Again, not so much at the high of the wick, but you obviously auction back down to a high volume area, and then this is where the breakout occurs on this candle. And then you can see here, okay, so this is the breakout candle, let's say, and as you can see that the volume is, well, obviously it's slightly decreased, but nevertheless, you can see here, I'm not sure how well you can see, but I'll read out the values for you. So you're seeing 5.5 million, 3 million, 1 million, 4 million. This is even quite small for me. 4 million, 3.9 million, 3 million, 3 million, 2 million, 3 million, 1.7 million, 1 million, 3.2 million, 4.8 million, 3.4 million, 4.3 million, 5.8 million, 1.9 million. There's a lot of buying interest, isn't there? Whereas when you look at the sell side, it's equal almost, but there is more. Okay, just visually, this is why we like to use these candles. There is more buys than there is sells, isn't there? It's simply yes or no answer. Are there more people buying this rise, or are there more people selling? The answer is there are more people buying, and it's not small volume. We are seeing millions coming in at buys. So there is a lot of interest, isn't there? Okay. And then we close that candle. We move on to our next candle. The push back down. So this is really, really important. The push down is really low volume. So you've just auctioned up high. Good volume. You've then had bears attempt to push it back down on abysmally low volume. Okay, so the push down was on an awfully low volume. And then what happens? You push back up, and then look at the interest again of, well, this one is obviously fairly even. Let's not lie. There's a lot of selling interest and there's a lot of buying interest. And then you obviously auction again for the next candle sideways once more, where it does continue pretty even. But in the end, I can just tell you that this did break up once more. So we did auction from the lows here. This is obviously from this 8130. You auction all the way back up to like 9k. So this did continue to auction up, but you can see just like really simply visually that price is increasing. And then this is the candlesticks, okay, with open interest of net longs, net shorts, and just overall open interest. And what you can see is price going upwards with open interest on the net longs increasing, overall increasing, net shorts obviously increasing here as well. But a requirement that you would want to see as you're heading up is net longs increasing, okay. So this is now another view. Okay, so sorry, I just had to write this. It's very hard to get a good screenshot of this. But what we want to see upon breaking a level is an increase. So make a note of this. When you break out of a range, okay, so when we were looking at something like this, okay, so when we're looking to break out of our range, okay, when we're looking to break out of our range, this is obviously breaking to the downside. The same when we're trying to break to the upside. Okay, so when we are trying to break out of a range, what we want to see is an increase in volume, an increase in positive delta. This one is really important, but I'm covering this next week. An increase in net longs, point of controls within each candle moving upwards. Okay, to show that people are interested in interacting at these levels. And also the bid-ask profile is full to the, I mentioned this, full to the right, as I was mentioning last week. Obviously our bid-ask profiles, what we want to see on the breakouts is that they're looking like P's. Okay, so there's a lot of buys as we increase in price, whereas if obviously you're bearish and you're moving down, you want to see looking like this, where you have a lot of sells increasing as you move down. Okay, so that is a general recipe of what you want to be seeing when you're breaking out of a range, and what you can say, like look at in like real time. Like you could be on the 1 minute chart looking at this sort of thing and determining whether you're going to break up or whether you are going to break down. Yeah, okay, so this is now another view of this, and what I've tried to decide, like dictate here, is what an average range kind of looks like. So obviously we range from the low to the midpoint, higher low, up to the highs, bounce off the midpoint, put in a high, break down, bounce off the midpoint, break below the range, come up, break below that low once more, reclaim the lows, come up to the midpoint, break the midpoint, hold the midpoint, break up to the highs, come down, swing for, this is what happening a lot in crypto. I did try and make this a little bit, swing for the highs, put in a higher low, break up. Okay, so that's what happens quite a lot. So so now what can we be looking at? Well, we can tell a breakout is likely going to happen if we break out of the range on high volume, high positive delta, And what I mean here is then as you decline, so generally this is what happens in crypto quite a lot now, is we will get that really good breakout with an increase in volume, with an increase in positive delta, but we would still end up getting a swing failure pattern to trap more shorts. The shorts are needed to go up in price a lot of the time because Bitcoin loves to trap the traders and then squeeze the shorts essentially. So swing forward a high, and then why is it a telltale sign that this is going to be a higher low? Well, generally we're looking to bounce off the value area high, as well as the decrease in price. It's also with a decrease in volume. Okay, so it's really as simple as that actually. That when we see that when we get that retrace, there's less sellers interested. So kind of like in this picture here, where was it? So like when we got, let's say when we get the decrease in price to test, okay. It's actually a pretty nice example. So we test then a really high volume level. Okay, so we break above the level. Okay, and let's say this was a swing failure pattern, and then we decline in price. The decline in price is on really small volume, and then when we start to break up again, the volume then comes back in. Okay. So that was actually ended up not quite nice. But yeah, that's kind of what you want to see. So if you swing forward highs, you want to see this then decrease on, low volume, maybe net longs decreasing and net shorts also decreasing. So this is a pullback primarily fueled by longs taking profits. Okay, so that's generally what you want to see. Longs taking profits on the pullback, and then as you hit that low, okay, decline price with low volume, and then you want to see just as you hit that support, really buyers snapping back in. Okay, so you decline on a decrease in volume, and then as you hit that level, okay, so a support resistance level, normally you do want to then see active buyers coming into the market aggressively. So as you pull back on the decline in volume, when you hit that support, you want to see buyers stepping in on at market, really. So then you want to see them pushing it back up, and upon that, you generally want to see the pullback on declining volume and then hitting support resistance, and straight away seeing buyers snap back in at market to push price back up, and then as price starts to increase again, see the longs increasing and increasing. Okay, that's what you want to see. Okay, so this is this is kind of what you want to see here. So I was referring to here the open interest type view, that you are increasing it in price, and you want to see the this is net longs increasing. So when you increase in price, you want to see net longs increasing. Okay, that is a zoomed in view. Or alternatively, this is the alternate that you're going to get, same sort of range but swing forward to highs. Okay, so we can tell a breakout is not likely to happen if we break out on low volume. Okay, so the break of the range is on low volume, then you get a pullback on a heavier sell volume, the next increase is on a lower volume, and then you're breaking down again on an increase in bear volume. Okay, so an increase in positive in negative delta, and that's increasing as you're pulling back. Net longs decreasing, and net shorts increasing on the pullback. That's leaning you into obviously a swing failure pattern setup. Okay, so I'm going to go over some examples on exo charts in a minute, but let me just talk you through two other key footprint charts. Okay, so this is kind of the setup view, and then this is how also footprint charts are really helpful. So I like to use them for volume clusters. Okay, and this is going to be called slightly different depending on the package that you're looking at or the software that you're looking at, but yeah, I like to use volume clusters here. Okay, so what are volume clusters? Really simply, I like to use volume clusters with a higher tick setting and also a higher time frame setting. So what I can see here really simply is areas then where there's dark colors is showing you where there's more volume. I covered this briefly last week. Okay, so where there's dark, where there's more darkness, that's where there's more volume, and where it's really light, that's where there's not very much volume. Okay, and simply, okay, when price approaches a dark area on the chart, one might say that there was a lot of interactions at that level, and price is more likely to get a resistance support bounce off of it. Okay, so when we zoom into this section of the chart, okay, and we are going to have to make sure the text is on volume. Okay. Yeah, okay, you have to sometimes zoom in quite a lot. Then you can see that, like in this section, for example, there had been, well, just look at this, 6.2 million, 7.8 million, 4.4 million, 3.7, a lot of volume at this level, okay? And then obviously this has not been interacted with yet. So what we could say is that if price comes up to here, that we could expect price to hit this and then come down. And we could also say another assumption that we could make is that price is likely to go, up from here very quickly before it hits this level, because there is not a lot of volume here, is there? Locally, there's not been much volume. So as there was not much people interacting at this level, price can go through it very quickly up to here. So we do have a monthly at 9,330, but we can actually say there's not a lot of, apart from it being a monthly, there's not a lot of resistance there, is there? So it's more likely, one could say, is that we go straight through 9,300 if we head up here. We could say it's more likely that we go straight through 9,300, and where we actually start to find resistance is around 9,650. So obviously, this is why you want to be careful when you're presetting shorts, because let's say you do preset a short at 9,330, you think it's a monthly level, it's going to turn around. But then if you look at it like this, I would be more under the assumption that if we look just simply at this anyway, with no other technical analysis, that price is really likely to go straight through this level. Okay, if price breaks up here, it's more likely to go straight through it and head actually towards 9,650 region, because that's where there was more interest from buyers and sellers. This is where people would be getting out of positions. Okay, so that's just one thing to look at there. And then obviously what we're looking at on the high volume is if we break above this high, so you can see this is what I mean here. So what would one want to see if this was a breakout occurring? This obviously, our last high was formed on around 1 billion contracts. We have taken the high here on 350 million contracts. Does that seem like acceptance above the highs? No, it doesn't, does it? It's massively less, almost half. Okay, so almost half the amount of contracts, in this candlestick, obviously the whole candlestick, but the interest of buying above this high is clearly very low, isn't it? So if we're looking at this attempt of the high on really low volume, does it seem like it's going to continue to go up? Well, the answer is no, because if this was a breakout, you want to see the volume increasing. And again, you look at this on a lower term time frame, you wouldn't be looking at a breakout on a 4-hour chart, but you want to see increases in volume as you're breaking above a range. And if you do not get that, then you could say it's more likely to head back down, essentially. Okay, because simply for the fact that people are not interested in participating at this level, and that is not 100% rule. So don't think it's 100% rule. If we don't, you can move up on low volume. So don't think that this is 100% guarantee, because you can see price heading back up here on very, very low volume down at the lows. Like we could get our next increase in price on, say, 200 million, and all that would do is, it's not to say it cannot happen, it's just to say you'd be very cautious on this rise, and you would be more interested in shorting the rise in price, because it's auctioning up on very low volume, and this can happen. But it just leaves you very wary of buying into this rise. Whereas if you're a breakout trader, let's say, and you start to break above a level on really high volume, well, then you can happily market buy in on that. Okay, so you're more happy to step in at market and trade with the strength, because the strength is looking bullish. You might not even get a pullback if the volume is there. So if you're breaking above a level on really good volume, okay, then that's when you're more likely to step in. Whereas if you don't have that, you're more likely to short the rise occurring. Okay, so that's volume clusters there. And then I like looking at the volume clusters on a high time frame and look for darkly shaded areas. This highlights to me or to anybody where there has been a high amount of volume transacted. Okay, and if I have other technical tools lining up with that level, it presents a good trade opportunity. And lastly, what we have under footprint charts are imbalances. Okay, so in terms of balances included in a setup, I'm going to do a whole live stream dedicated to imbalances, because you actually get setups off of the imbalances. But really simply, what I want to do in this live stream is just explain what the imbalance is, because there was a lot of questions over the last week of this, and I just had to answer this question a lot. So I just wanted to add this into the stream this week. The imbalance is calculated from left to right. So a lot of people were saying like, why are these imbalances listed? These levels are really, really similar. And they were looking at it like this. And this is actually incorrect. Okay, so that's the wrong way of looking at it. And that's why I think it was confusing for people. The imbalances is calculated, diagonally. So if you're transacting at this price, there was 1.3 million buys versus 369 sells, and when you're looking at it, that's what causes the imbalance diagonally. Okay, so the diagonally between this price. Okay, and I have mine set up here. I think it's on 400%, so 400% imbalances. So when there's 400% more volume coming in than sells, then this is telling me that there's a buying imbalance, and this is just really simply saying there's a lot more people buying than there is people selling. This you get whole setups from, but yeah, I'm going to dedicate a whole live stream to that because it's quite complex all the tools that you have to use together. But imbalances are really key, and yeah, it's not horizontally how these are worked out, it is diagonally between the prices. Okay, so it's diagonally there, not horizontally. Yeah, I imagine there's going to be a lot of questions. So let me see what we have going on in here. Let me take these. I need to start using 2 pints of water. Could we get this EXO template to Delta clusters? I have already posted this one in the chat. So in the contenders section general chat, I've posted all the templates. This is just template number 1, okay, and then I'm changing this over to delta clusters, volume clusters, bid ask profile. This is all under the same template. I'm just changing this, okay, so it is all under still that same template, okay, and I have posted this one in the chat under general chat contenders section. Which one of those buy/sell orders will reflect the shorting? How would you know what is a short? For example, you have 956 buy order on the bid ask profile. Is that a buy long, or could that be a sell order placed, or is the sell side? So right, let's zoom into this. And give an answer then. So what we're looking at here, so let's just go up to the top here and put on our bid ask. So what we can see, okay, let's just increase it slightly. So what we can see here, so as we reach the high, so this was at the high, there was 1.7 million contracts bought at market and there was 18,000 sold. So the question is, how would you know what is short? So we know that this is, I'm a bit slightly confused. So how would you know what is short? So we know what's short because short is reflected on the left. Okay, so how would you know what is short? So shorts are reflected on the left, buys are reflected on the right. For example, if you have a 509, so you have a buy order on the bid ask profile. Yes, so let's say we have a 1 million bid on the buy ask profile. Is that buy long, or could that be a sell short order placed? Or is the sell side the short side? E.g., 900k sell could also be a short. So this is only showing market orders. So I think that's what you're trying to ask. So this is only showing market orders, and obviously to buy at market you have to sell into a limit order. So this is obviously filling people's limit orders, but these is market orders. It's only showing me like market orders here. Obviously to place a market order you do need to sell it or buy into a limit order, but this is only showing as market orders. So this is showing me there was 2.6 million contracts sold, 1.4 million contracts sold and 2.6 million contracts bought. Okay, and you can do it like this on the bid ask profile, so it makes it a little bit easier. So obviously green here is our buying, and the gold is the selling here. Okay, so those 2.6 million bought, 1.4 million sold at market. Okay, so is the short side, so I think that answers your question. So is that a buy long, or could that be a short order placed? So really simply, these are market orders only. Doesn't show limit orders. Confused a bit now. Are not sells on the left hand side and buys on the right? Yes, that is correct. So sells are on the left hand side and buys are on the right. Yes, that is correct. Uh, uh, on the slide of Monday's high. Oh God, yes, I did actually, yeah. So that is apologies. That on the right, yes, I did, and that is because I had my. I'm not sure if you noticed actually. Just realised that. So where was that Monday's high? Um, yeah, that would have been actually a trap long. Apologies, that was very poor. And you, this was because I know why I've done this now, and it's because you see how I had my colours the wrong way around here, and it was. Yeah, that's actually really embarrassing. Obviously, I've adjusted this now, and I originally set up my colours the wrong way. That's really embarrassing. Actually, I have my colours set up the wrong way around, and that has actually that while I was making this, I obviously had not updated it. That is honestly true, and that is an absolute rookie mistake. And thankfully, I've updated this. But yeah, 100%. The buys are on the right and the sells are on the left. I actually done a really rookie mistake here by having my colours the wrong way around and just absolutely mine where it was taken away from me, I suppose. But yeah, essentially the theory is still the same, although that actually then is a poor example, I suppose. But the theory is still correct. But yeah, the buys are on the right, the sells are on the left. Wacky example that I took there, and that was because I had my mind was absolutely blown. So yeah, I apologize. I do apologize for that one. When price reaches those highs at the top of the range, how much time do you have to look at the profile and make a decision? Well, it kind of depends. So there's not like 5 minutes you have to make a decision, or like you have 1 minute to make a decision, or you have 4 hours to make a decision. I cannot say like this is how much time you have to make a decision. You know, it's sometimes you'll have a minute, sometimes you'll have 5 minutes, sometimes you'll have 10 seconds sort of thing. So it's impossible to me. It's impossible period for me to say like how much time you have to make a decision. Okay, you do simply have to just, you know, if we were breaking up here, let's say, and we were seeing so now yeah, that's pretty funny, I guess. But yeah, if we were seeing the bid increasing here, 1 million, 2 million, 4 million, 6 million, 8 million, and we were seeing like a lot of, you know, volume coming in here, you know, obviously the delta would be increasing if this was, you know, happening, and we were seeing a lot of buys coming in at market, then you might have to just buy at market with that, because what I would view that as a sign of strength. People are aggressively buying here at market as we're breaking a high, and then obviously you don't have a lot of time. You might have seconds to join in on that move, and if you leave it 1 minute, price might have already increased $100. So, you know, sometimes it will work like that where it's really, really strong, whereas sometimes it's going to, you know, hover around sideways. So there's not really, I cannot really say this is how long you have. It is, you just got to like trade off what the chart is giving you. Sometimes it's quick, sometimes it's not like that. Is there a way to see total of buys and sells at that point? Yes. So really simply, to see the total here, you would just change this to volume. Okay, so that's going to give me a total of 1.8 million. Okay, so you can see on the bid ask that it was 1.7 million and 18,000 contracts, and it's just going to round it. And obviously that gives us a total of, that's going to give us a total, where am I going here? Oh God, I'm messing up here big time. That gives us a total, of 1.8 million contracts, okay, because that's the total of the volume. And then obviously we can see that was 1.7 million buys, 18,000 sells, and that gives us a total of 1.8 million. So yeah, that's how you see the total of the buys and sells. Chart of the week, I longed WRX at the weekly today. Was there any way I could have known before it was likely to hold or not? I'll go through that at the end if there's any. I'll stick with this, and I'll take the chart of the week questions at the end if there are any. Well, I'll go through that one in a second for you. If you rise on low volume past a high HVC, I'm sorry, I'm a bit stuck on what the acronym is of HVC. Someone else used an acronym in the group today of MP, and I was like, what does MP stand for? And then it was like monthly point. I was like, okay, I'm not sure what actually HVC stands for. Maybe I'm having a real big brain meltdown at the moment, but I cannot think what HVC stands for. No idea what HVC stands for. But basically, if you have a rise on low volume past a HVC, what conclusion can be pulled on that HVC that has just passed? Is that now a strong support, or just I have no idea what HVC stands for, and maybe I'm embarrassing myself real hard right now, but I honestly have no idea what that stands for, or I cannot think what that stands for. High volume cluster. Oh right, okay. Oh, okay. So I would call this HVN, high volume node. So yeah. So sorry, I've never ever seen HVC before, because I call it HVN. So I guess I call the high volume clusters high volume nodes. So I guess that's why I'm confused here. But yeah, HVC. My acronym is HVN for high volume node, but there is, yeah, now I understand what you mean. Actually, they are the same thing by just different names. But so the question is, if you rise on low volume past a high volume cluster, what conclusions can be pulled then on the high volume cluster that just passed? Is that now a strong support, or just an invalid high volume cluster? So the question, let's gonna have to go over to the chart and like load this up to answer this one. So let's come up to a high volume chart. Okay, let's switch this to a volume cluster. Okay, and let's just stick this on none for now. So what we can see here, I'm just going to lower this slightly. So what we can see right now is we're currently building a high volume cluster, and we have a high volume cluster here at around 9,650. Okay, so what we can say is, so the question is, if we break above this, okay, and now it's passed, is this level likely to be strong support on the way back down for when we head back up? My opinion of that would be, okay, now I have to like think of this one, of how I would look at this. So if we broke above this, would I necessarily think that's going to be strong support to go back above here? My answer is no. Okay, so when I'm thinking of this, my answer would be no. I wouldn't necessarily expect that to be strong support. I would expect it to be strong resistance and do this, and then if we broke through, it might offer strong support to go back up because it was a resistance support. But if we do not do that, and price does not really respect it per se, and does this straight through it, then I wouldn't be looking at this as a support on the way back down and expect this. Okay, I'd go off with some other information. I wouldn't expect this to be a strong level. Okay, so I have to see interaction at this level on the way up for me to think of it as a level that could flip. But if price just goes straight through it, personally, using this footprint theory, I wouldn't expect it to be support when retested. Obviously, there is theories that would say that this is like a breaker and you break above it, and when you come back down it's support. But in footprint theory, I would not expect that to be the case. If you just brass through this level, I would see no reason why we wouldn't want to be looking at that level again as support when retested. I'd have to look at some other level. Has the rise up through 3,330 prior being washed? Has the rise through 330 prior being washed? So is 9,330 an important level, is basically the question. I mean, you do have a lot of confluence at 9,330. So obviously we just looked there and said if we go through from a volume standpoint, it's likely to go straight up to 9,600. But you do have other confluences at this level. Okay, so you do have high to the lows to 618 on top of the monthly. So it's still a big level. It is still a big level where you can look for this, but then does it go through it then quickly? I mean, I guess I wouldn't expect it to just go straight through it. You do have confluence at this level, so the level is not really washed per se. It is still a big level. You can see how it has been resistance, support. Like it is still a level, and there's no reason to think that it's washed level. Like definitely not. But in terms of the volume aspects, we could expect that there was not a lot here, and it goes straight through it. So I'm personally not going to try and short this, okay, just blindly. I'm not going. I was originally thinking of doing that when we were at the lows, if we just got a really quick rise in price, but because we are grinding up here, okay, because we're grinding up here, I'm not going to try and short this with any bids preset. So I don't have any bids at the monthly, so I'm not actually going to try and short this level. So those were those questions. So that looks like the question's done. So then going back to this one, I long WRX at a weekly today. Let's go back. So you longed WRX at the weekly today, and was there any way that I could have known beforehand it was not likely to hold? I'm not sure which point you would have longed it on. Did you long it on this today? So that was yesterday. So you longed it here today. Well, I guess what I would say here straight away is that it did originally hold. So you were holding here for a good hour, and then you lost the level, and then you back tested it. Well, I would have thought like it, if you bought this level and then you lost the level and then you back tested it, you would have got out break even. So I'm not sure whether you took a loss on this one or not, but is there a way that we could have said, I mean, for me, let's just quickly see. So maybe, so you had a lot of bearish divergences. So yeah, you have a lot of bearish divergences on this rise. So what you could say is that upon this rise in price, okay, so looking at it like this, obviously you don't have exit charts for altcoins, but looking at it like this, there was clearly you rose in price, but there was no more, there was no buying interest. So in that regards, you might have expected a heavier retrace, because of the fact you've attempted to then continue with this trend and it's failed. Essentially, you've lost it, you've tried to do it again, you've come back down. I mean, was it a bad trade? I don't really think necessarily it was a bad trade that you took here on the back test of this weekly. I didn't day trade, I didn't take this as that trade, but I think if you took this trade on the weekly, and then when you lose it like this, then you could have just sold break even at this opportunity, or likely had your stops here, and you probably got stopped here, or you could have got out here. Nevertheless, obviously a losing trade, and that just sometimes happens. So but could you have seen it coming? I suppose not massively. You could have seen that coming. I guess you would have had to have looked, because of the fact that the I don't know, you just had a lot of bearish divergences going on, I suppose. Might have led you to think that it was going to trade down lower. And what else? Let me just hide this. It's actually really in the way. So what else would I looked at here? So I suppose what else you could look at here is in terms of, I'm not sure if you have this going on. So you also were reaching the top of your channel here, okay? So then you're obviously going from low to high to low to the high, back at the midpoint again. So I guess, I don't know, like this was, I mean, all I would question is what was your, I didn't take this trade, so I don't know, but like what was your confluence to take this trade? Like just trading off of a weekly is obviously not enough. So all I would say is it wasn't necessarily a bad trade, but what other things were your reasoning for taking this trade? Because just being a weekly is obviously not enough. You would have had to have seen something else, and I just question, like, what were your other reasonings? I'm not sure. So those are all the questions that I've had come in on the sheets, and let me see. I will export this new template, because yeah, the colors I did mess up when I originally done it, so I will just like save this. I'll export the template and I'll upload it for you guys and girls. Yeah, that was a template I done the colors incorrectly, so I need to adjust that, and I'll send you the new template. I'll upload it as soon as this stream ends. Can you use footprints for swing trading, or is it time to put the delta into the candle too laggy? So yeah, you can use these as a swing trader. Okay, so I personally find it more beneficial as a scalp trader. I personally find that more helpful. But can you use this as a swing trader? Absolutely, you could use this as a swing trader still. Obviously your entries and exits are just like more lagged. So you could still use this, for example, of identifying that this is going to be a resistance up here. Okay, you could still zoom in here, and although this is the thing that, in my opinion, as like a swing trader, you're not gonna be looking at this right now thinking, because I suppose the way that I would say is a swing trader right now is not going to be interested in trying to time the exact high, maybe, or they're more interested in just like placing the bid, placing their invalidation. I guess the answer to your question though is yes, you can use this as a swing trader, but I personally find it a lot more helpful as a scalp trader. If I'm totally honest, I can't think of many instances where I would use this in swing trading per se, apart from identifying better support and resistance levels. But because obviously as a swing trader, you're not going to be going down now in the 3-minute chart really to look at, are we getting acceptance, are we not getting acceptance. Yeah, so my answer to your question is, I suppose yes, you can use this as a swing trader, but I personally would say it's a lot less helpful. I don't know, I just guess I would find I can't think of many instances where I would use this as a swing trader. I'm more interested in lower term time frames, seeing acceptance, seeing a rejection, and getting in and out, if that makes sense. But yeah, that's not to say you cannot use this as a swing trader. I'm sure you absolutely can, but yeah, I personally don't use it like that. No, that was my fault. I absolutely messed up with my original colors. But yeah, the template has been sorted, and yeah, the theory though still sticks. It's just, yeah, I messed up with those colors. Da, 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 Sorry, there is a lot of stuff here. Let me see what else we have. Just reading through the comments. So I think I confused a lot of people with yeah, I confused myself. So there's no it's normal for you all to be confused, because I totally confused myself. Which is really, really, really bad. I might redo this one in my own time and then just upload this as a stream, because yeah, that is pretty bad. But yeah, basically, yeah, 100% though, the buys are on the right, the sells are on the left. Apologies that I done that incorrectly there, but yeah, I confused myself with the colors. So I'm just reading through all the comments. Wow, this is a revelation. Yeah, honestly, it is obviously really helpful to know this. How much does this software costs? I don't know, about $20 a month. I know someone else answered, apparently it's $30 a month. So yes, you can use it as swing trading. You might want to like adjust it into your own strategies. I haven't made like a cheat sheet per se, but I think if you just like rewatch this video a few times, it should help. I can do a cheat sheet, but I think you could, yeah, I can do a cheat sheet. I haven't done one, but I could do one, yeah. When we see in the high, I haven't done a cheat sheet actually for so long. I literally haven't done a cheat sheet for so long. I should probably make some, to be honest. When we see in the high of the candle a lot of market longs, how do we know it's not a trap? Well, this is the thing. So there is never 100% this is a trap, this is not a trap. Obviously, any time can be a trap, but what you got to be looking for to think to yourself, is it a trap, is it not a trap, is if you're breaking out and you're breaking out on an increase in volume, an increase in positive delta, an increase in net longs, okay? If you're seeing this come together, is it likely that this is a fake out? The answer would be no. It's not likely that is a fake out. It's not likely that we're breaking above a key level. We're seeing everybody get really aggressive on the buy side, and it turns out to be a trap. Obviously, it's possible, because anything is possible, but it's not likely. Whereas if you break above a level, My throat is killing me right now. If we break above a level, and we break above that level on a really low volume, there is hardly any buying interest, and there is shorts increasing, then is it likely it's a fake out? And the answer is yes, it's absolutely likely that it's a fake out. So you got to go in terms of probabilities. Obviously anything can happen, but one has to say it's not likely that it's a trap. So yeah, Mike kind of answered that question, I guess, about the cheat sheets as well. Like I emphasize his words here that yeah, this obviously is brand new theory I've not covered before, and for many it is totally foreign. So yeah, rewatch the streams, like all just last week's, this week's. You know, we rewatch them, you know, 3-4 times. But yeah, cheat sheets can also help. I'm going to go over, I'm going to save all the imbalanced questions because there's 2 imbalanced questions. I'm going to just save them for the imbalanced live stream rather than like doing it now and then doing it again for you all. But basically, yeah, it is only diagonally. Okay, so it's only diagonally. But for in terms of how you trade it, I'm going to, wait till that live stream. Yeah, I didn't take a larger didn't take a larger position, by the way, on WRX when it hit that weekly. Yeah. Oh yeah, I did say I was going to go over Bitcoin. I just saw the comment. I did forget about that. So I'll load up this. Right, so the majority of the other questions are about like what I'm looking here on Bitcoin. So really simply, I'm just going to end with a quick analysis here on Bitcoin. And it is that, well, let's just zoom out and do a bit of a higher term time frame view of this first. Okay, so really simply, we have an uptrend here locally. We hit a high. We retraced off of that high. We took the lows. Okay, so we took some important lows and we got back into the channel. And now we're breaking out of this channel, or attempting to break out of this channel. Okay, so really simply then, more locally, we have been inside of the range. We've gone to the middle of the range. We've broke out of the range. We've back tested the range, and we're moving up again. Okay, so we'll move down another time frame, and I'm not going to go any lower than the hour here, but we can see that we've broken out of this channel and we've back tested it once, twice, and we're trying to break up again. So what we can just say, I'm going to have to zoom down. So what we can say is just really locally here, we are going higher high, higher low, higher high, higher low, higher high, higher low, higher high, potentially the higher low, and then we're going to continue up here. So really locally, until this breaks down, one has to still envision that it's going to push up for another leg here, because essentially we've broken out, back test, and we're looking to move back up. So really, oh my god, really simply, my throat is really starting to feel this. Really simply, we are just looking, yeah, just until we lose this channel high. So maybe we do this and we reject, but really until we close back in here, there's no reason to think, well, just really simply, I'm just going to say that we've broken out this channel, we've back tested it, it's held, and we're looking to move up again now. Okay, so what could we say for a little bit of confirmation? Well, coming back inside of this channel. Okay, I'm just going to keep it as simple as that. So yeah, currently this is the channel that we've been trading from for quite a long time. Okay, and yeah, we've broken out of that channel, we've back tested that channel, and it's trying to move back up here. Okay. What about the example? So yeah, we could use that actually as an example. So this one, so what we could say here is this was trapped longs essentially. So yeah, I will reiterate this one. So this is sells on the left, this is buys on the right. So we do see, as we're moving up, the decrease in sells. These colors absolutely screwed me on this one. So we do see the decrease in sells, we do see the increase in buys. But what we can say here is we hit 9150, big level, and yeah, in this example then there was trapped shorts, trapped longs at the high, and then obviously price has decreased. But it's pretty hard, because what would also we need to be looking at in this example. Okay, so we don't ever just look at the footprint chart on its own. You do really want to be looking at this with open interest, with volume, okay, with obviously you can see the delta statistics. So yeah, you really want to be looking at your open interest on these rises, okay, your net longs, net shorts, and your open interest. Really key. And also, yeah, be aware of the levels that you're running into, because what we can say is, as we know, the first time we hit this level, okay, so the first time we hit this level, which was our 9153 level, we do know that it was this monthly. I'm going to have to end this stream after this, but we do know. So what were we looking at? The first time we ran into this high, we ran the first time into the monthly. So run up, hit the monthly. So we had a lot of buys come in right on that monthly, but what we can say, it was the first retest of it. Okay, so the context is that we've run into a monthly resistance, and there was some trap longs in the end, and obviously. So what could we say here? This was a buying climax, and price went down. I'm going to have to end it here. I apologize, but my throat is ultra dry and it's getting a bit painful. So I'm going to have to end it there. I have answered all the questions though. If there are any others, just come across to Discord and I'll answer them in Discord. So yeah, I hope that you've enjoyed tonight's live stream. If you feel it's necessary, I can make a redo this one, or like in my own time, not on a live stream sort of thing, and just upload a video. So let me know if you want that, and I'll do it, because I kind of did mess up with those colors, which is my fault. So I'm happy to do that if people need it. But yeah, I'll upload my template into the contenders section now, so you don't need to worry about changing the colors. I'll just upload the updated template, because I've already done all the color changes, as you can see. So I'll upload that template straight away, and yeah, I'll catch you all in the chat. Cheers everybody, thanks, and yeah, have a good one. Bye.